Hello everyone, and welcome back to the channel. Today, we're diving into some big moves in the currency market, specifically focusing on the Australian dollar versus the US dollar. It's been a bit of a roller coaster, so let's break it all down. The Aussie dollar has been on a downward trend against the greenback, marking its fifth straight day of losses. On the surface, you might think, well, the Aussie must be weak. But here's where it gets interesting. The Reserve Bank of Australia, or the RBA, has been sounding pretty hawkish. What does that mean? It means they're talking tough on inflation and are seriously considering raising interest rates, possibly as soon as February. Normally, talk of a rate hike would boost a currency. Higher rates attract foreign investment, which increases demand for the currency. So, why is the AUD falling? It seems the market is currently more focused on what's happening in the United States. But this RBA hawkishness could act as a safety net for the Aussie dollar, potentially limiting how much further it can fall. If the market starts to believe a February rate hike is a sure thing, we could see a quick turnaround for the AUD-USD pair. Now, let's flip over to the other side of the equation, the US dollar. The latest economic data from the US paints a mixed but generally cooling picture. The November jobs report showed a slight beat on payroll growth, which is good. However, the numbers for October were revised down significantly, and more importantly, the unemployment rate ticked up to 4.6%, the highest it's been since 2021. This suggests the once red-hot US labor market is finally starting to lose some steam. On top of that, retail sales were flat. This is a big deal because it tells us that consumers, who are the engine of the US economy, are starting to tighten their belts. When people aren't spending as much, it signals that economic momentum is slowing down. So, what does all this mean for the AUD-USD? We have a situation where the US economy is showing clear signs of cooling, which typically weakens the US dollar. At the same time, Australia's central bank is hinting at raising rates, which should strengthen the Australian dollar. Despite the recent fall, these underlying fundamentals suggest that the Aussie dollar might have some support coming its way. The current dip could be temporary, as the broader economic trends seem to favor a potential recovery for the AUD against the USD in the near future. It's a classic currency tug-of-war, with economic data from both countries pulling in opposite directions. We'll be watching closely to see if the RBA's hawkish stance starts to outweigh the signs of a slowing US economy. That's all for today's update. What are your thoughts on the AUD-USD? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more financial market analysis. Thanks for watching, and I'll see you in the next video.